Scalping can be incredibly effective, especially when you have the right tools and strategies in place. In this video, I'll walk you through the most effective scalping strategy you can use with just 2 free TradingView indicators. As always, make sure to stay tuned until the end of this video. Don't forget to support the channel by liking the video and subscribing. Alright, let's get started. Start by selecting the BTCUSD Pair on TradingView and setting the time frame to 15 minutes. Once you've got that set up, we can move on to adding the first indicator. To add this indicator, go to the Indicator Search tab and type Triple Confirmation Kernel Regression Overlay. Select the one by Quantra System and add it to your chart. Next, we'll adjust its settings for our strategy. In the Input tab, leave the indicator at its default settings. Then, head over to the Style tab and uncheck the boxes for mid and background color. This will clean up the chart and make it easier to read. Once you've made these adjustments, click OK to confirm the changes. Now let's go over what this indicator does. The Triple Confirmation Kernel Regression Overlay helps guide your trades by showing you whether the market is overbought or oversold. If you see a navy-colored cloud and the candlestick is also navy, that indicates a bullish trend. Conversely, if you see a purple-colored cloud and the candlestick is purple, that indicates a bearish trend. Furthermore, when the price candlestick is within the navy-colored band, it suggests the price is in an oversold area, making it a potential opportunity to buy. On the other hand, if the price candlestick is within the purple-colored band, this suggests the price is in an overbought area, signaling a potential sell opportunity. Go back to the Indicator Search tab and type in RSI. Select the default RSI from TradingView and add it to your chart. We're going to customize the RSI a bit to better suit our strategy. In the Input tab, leave the settings as they are. Then, go to the Style tab and uncheck all the boxes except for RSI, RSI upper band, RSI middle band, and RSI lower band. You can also customize the colors of the RSI and its bands to your preference, which can help make it easier to differentiate between signals on your chart. Once you've made these adjustments, click OK to confirm the changes. Now let's talk about how we'll use the RSI in this strategy. We'll be using bullish and bearish divergence patterns to spot potential buy and sell opportunities. A bullish divergence occurs when the price forms a lower low, while the RSI forms a higher low. This suggests that the selling momentum is weakening, potentially signaling a reversal to the upside. Conversely, a bearish divergence occurs when the price forms a higher high, while the RSI forms a lower high, suggesting that buying momentum is weakening and a reversal to the downside could be imminent. Now, let's break down how to use these indicators to place a sell order. First, check if the price candlestick is in the overbought area within the purple band, and the trend is bullish, purple candlestick and cloud. Once you've identified that condition, pay close attention to the market structure. If you notice the price forming a high and then a higher high, this could indicate a potential reversal, but you need confirmation from the RSI. Check the RSI for a bearish divergence. If the RSI forms a high and then a lower high while the price forms a higher high, this signals a bearish divergence, indicating that the uptrend might be losing strength. To confirm, you can draw a trend line from the high to the higher high on the price chart, and then draw a trend line from the high to the lower high on the RSI. Once confirmed, you'll want to wait for the trend to shift from bullish to bearish. This shift is confirmed when the candlestick color changes from navy to purple. Also, ensure that the RSI signal line crosses below or is already below the middle band line. When these conditions are met, you can place your sell order after the candlestick closes. Make sure to set your stop loss at the last swing high and use a risk-reward ratio of 1 to 1.5 for your take-profit target. Next, let's talk about placing a buy order. Look for the price candlestick to be in the oversold area, within the navy band, with a bearish trend, purple candlestick, and cloud. In this case, focus on whether the market forms a low, followed by a lower low. Then, check the RSI to see if it forms a bullish divergence by creating a low followed by a higher low. Draw a trend line from the low to the lower low on the price chart, and from the low to the higher low on the RSI chart. If the divergence is confirmed, wait for the trend to change from bearish to bullish. You'll know this change has occurred when the candlestick color shifts from purple to navy. Additionally, make sure the RSI signal line crosses above or is already above the middle band line. Once all conditions are met, place your buy order after the candlestick closes. Your stop loss should be set at the last swing low, and once again use a risk-reward ratio of 1 to 1.5 for your take-profit target. One of the key points to remember is that no trading strategy is perfect. Always manage your risk carefully and keep your emotions in check. Consistency, discipline, and strong money management are crucial for long-term success in trading. If you found this video helpful, please give it a like and consider subscribing to the channel. Your support really helps us grow and continue sharing strategies like this with the community. Thanks for watching, and I'll see you in the next video.